As stocks have been selling off on recession fears, I'm starting to see a lot of opportunities in the market, especially amongst the big sevens, the magnificent seven, that they were loved just a few weeks ago or a month or two ago. They were the best thing ever. You couldn't make money if you didn't own the big seven. Well, it's no longer the case. The sentiment has changed very, very quickly, and people are starting to hate on them. And as I told you guys, my strategy in the market is to buy things that people hate, sell them when they love them and do it again. And in my opinion, this is presenting a good buying opportunity on the Magnificent Seven and a lot of the big stocks. And it could be maybe one of the last buying opportunities that you're gonna see. Maybe it's gonna go much, much longer than that, maybe for another 6 months. But I think this is presenting a very good buying opportunity. And I'm gonna share two stocks that I believe right now are one of the best buying opportunities in the market, mainly within large cap, mid cap kind of stocks and mega caps, not much in small caps. Small caps haven't been going down as much. So I really like the big seven over here, even though I'm not a big fan of them, but I'm liking them. I'm liking the valuations. And I'm going to talk about two of them. And I really hope you enjoy it. I'm going to get straight into the first one. And the first one is Amazon. And I did talk about Amazon before earnings, and I was expecting the company to report good earnings, and this is what it did. Its earnings were very good. Amazing beat on EPS, massive stuff. Net income was up 100% year on year, but the stock goes down 16% on the month, as much as 8.7% on the day. Over 11% it was down at once, 11% to 161 or $162. Mind-blowing pullback on Amazon. In my opinion, it was a massive, massive overreaction, and everything else was been going good for Amazon. $1.26 versus $3. Amazing beat on earnings, amazing stuff. Revenue, a very slight miss on revenue. AWS, a beat on in terms of AWS, slight miss on advertising, nothing too crazy. In terms of guidance, they have a midpoint of 156.25, and the analyst estimate was 158.25. So this is like a $2 billion miss. I mean, this is no big deal. A massive, massive overreaction on the stock. And it's like the markets, they just want to sell Amazon. I mean, it's absolutely insane. This is a company that's nearing an inflection point. And I'm going to tell you why. It has a bright future ahead. Amazing stuff, amazing areas where they're going to generate massive, massive free cash flow. And it's starting to roll in. And free cash flow is up like 100% year on year or something crazy. Net income is up 100%. And the stock has been going down. The stock has been trading at the same price it was trading at in 2020. In 2020, I mean, absolutely insane. And Amazon keeps going down. I did mention net income. It's up over 100% year on year. Amazing stuff. They have the international segment, which they're starting to get profitable on it. They weren't very profitable before. This is the second quarter of positive operating income, and this is a good improvement, and I think it's going to be a huge area for them over the long term. Free cash flow has been steadily increasing every single quarter. It's very encouraging stuff, and I believe Amazon is at an inflection point in terms of free cash flow from negative 11.5 billion to 36.8 in 2023, 54 billion in 2024, up to 134 billion dollars in free cash flow by 2028. And I've seen some analysts from Morningstar up to 150 billion dollars in free cash flow by 2028. And what's happening? Amazon is going down. And I think a lot of people are looking at the previous, record of Amazon in terms of free cash flow. And they're saying, yeah, free cash flow is not a, useful metric for Amazon because of CapEx. It's been all over the place. But as I did a lot of research, this is ending. Yes, they're going to have some CapEx, of course, and some of it maybe is on AI, useless stuff that's not going to pay off before years and years from now, if it does ever pay off. But in terms of free cash flow itself, the cash is coming in like never before. And every single quarter is getting better, and they're beating estimates on free cash flow. And it's an amazing free cash flow expansion story, up to 134, and some analysts are expecting up to $150 billion in free cash flow for Amazon. And if you look at Amazon's multiple, it's trading at 31 times free cash flow, and this does include a lot of stock-based compensation, but it's trading at 31 times. 31 times free cash flow for Amazon is very cheap for the free cash flow growth that it's expecting. This is less than 1 times free cash flow growth. I mean, guys, for a company like Amazon to get it below 1 time growth, this is absolutely insane. I mean, I buy small and micro caps. I go all over the place to find companies below price earnings growth of 1 that actually makes sense. And you're buying a quality company like Amazon for less than 1 time the free cash flow growth. It's mind blowing. 40, almost 47% in 2024 free cash flow growth. 2025 expected to be 38, then 32, then 20%. But this is again, this is more than one time, less than one time, free cash flow growth, price to free cash flow growth for Amazon. Absolutely insane. It's unheard of for a mega cap to be buying it below one time growth. I mean, it's absolutely insane. And if I look at what's happening for the free cash flow growth, and I take the 133 billion, even though a lot of analysts and a lot of people I know that know Amazon very well told me that the 150 billion number is more accurate, as Amazon has been beating estimates on free cash flow. But if we take the 133 billion dollars, and we did discuss that Amazon is trading at 31 times free cash flow, so we're going to take another multiple contraction from 31 times to 25 times, so I could illustrate the point. Okay, we get the 133 billion dollars, and then we time it by 25 times free cash flow. Instead of 31 or 35, we're taking 25 times free cash flow. This is $3.3 trillion market cap. We divide it by the 1.7 trillion where it's trading at right now, we get something pretty close to 95% on the upside. This is over a double, pretty close to a double over the next 5 years, or 14 to 15% a year for a quality company like Amazon. And it does have a lot of upside potential in different areas. If free cash flow was $150 billion, and then we time it by 30 times free cash flow, what it's trading at right now, this is a $4.5 trillion market cap. You divide it by 1.7 billion. This is pretty close to like 164% on the upside in 5 years on Amazon. I mean, this is absolutely insane. And I'm not someone that's such a big fan of big mega caps and Amazon and Apple. I mean, I much rather buy small caps all day, every day. But it's very rare for you to find such an opportunity for Amazon. And I do believe in the free cash flow growth, that it's sustainable and it's likely going to hit. And you still have a lot of cash from Amazon, something pretty close to $86 or $87 billion in cash and cash equivalent. Long-term debt is like $58 billion. I wouldn't be surprised if Amazon launches some kind of a buyback program if the stock keeps going down, although this is not something they normally do. But I really wouldn't be surprised if they eventually do it and the stock bottom on it, because it's getting too cheap for the kind of free cash flow growth. Yes, it's up a little bit year on year, like 96%, but net income's up 100%. So it's not just the price going up, it's the fundamentals going up with the price, and it may be a little bit more than where the price actually is right now. So this rally isn't some rally that's a bubble, and it's not like Amazon is going to go back to $95. I would be shocked. I would put in all my portfolio in Amazon if that happens. This rally is supported by fundamentals, and I would highly doubt that we get back like to $100 or below $100. Also, anything is possible, but I doubt it. And that's what I'm saying with Amazon. The second one, which a lot of you might skip because it's a very hated stock, and this is PayPal. PayPal was absolutely stunning in terms of earnings, massive beats. It raised free cash flow guidance. It raised buyback guidance in terms of buying back stock. Both of them massive, massive raises and massive beats on everything else. And PayPal at one point was up 15% if it wasn't for the sell-off on Friday. This is when it started to cool off on Thursday. Then Friday, it went down 5.5%. And I would have thought that maybe PayPal would have kept going up if it wasn't for the events that we had on Friday. Even American Express was down 7%. JP Morgan was down 4.5%. And every stock was pretty much down. It was hard to escape the crash on Friday. Everyone was selling stock, and that's what we had before, and that's what we've been having. And a lot of you asked me, is it for PayPal? Was this maybe the bottom on the stock? Is it going to get better from here? Or is it just another rally like we had before? We have a rally, everyone gets excited, the bottom is in PayPal, then we go lower. It happens so many times. And a lot of you asked me, do you think this is it? And I really don't know. It's hard to predict if the stock is bottoming out or not. But looking at everything else that I'm saying, this has to be it. With a new CEO, a new change in sentiment, the fast lane products that's going to bring in a lot of growth for PayPal. And it's beating on everything, and it's raising guidance. I mean, it cannot get any better than that. Revenue 8%, net income 9%, EPS 17%. They beat on pretty much everything, over 11% payment volume. This is not a dying company. Maybe it has no modes. Maybe Apple Pay and others are taking over, but it's still increasing payment volume 11%. And this is not a sign of a dying company. Now, something that freaked out some people a little bit, and that was active accounts, which actually decreased. And that's not a good sign at all. But if you look at it on a quarterly basis, it has been somewhat improving from 426 to 427 to 429. It did decrease year on year, but quarter on quarter growth, it has been growing. And if you look at the monthly active accounts, it also been fluctuating from 217, 218, 224, 220. Now it's 222. So it's been all over the place, but it's been holding up within a certain range. And I personally don't believe it's such a big problem as a lot of people claimed. But I did talk about the payment volume, all that stuff. Everything was amazing. In terms of guidance, the company did raise guidance in free cash flow from approximately $5 billion to approximately $6 billion. This is a massive, massive increase. Share repurchases from at least $5 billion to around $6 billion in buybacks. And this is the first time PayPal has done this in a while. And that's why I believe this has to be it. I mean, it cannot really get any better than that. And it couldn't have been getting worse as it was before. And everyone hates PayPal, and that adds to a lot of that stuff. But this is amazing stuff from the company. And the way I look at it, I see $6 billion in free cash flow. Stock-based compensation is $1.5 billion. It would leave us with $4.5 billion of free cash flow after stock-based compensation, which is around a 7% free cash flow yield. And the company is expected to grow 7 to 8%. It used to grow 10%, expected 7 to 8%. And I think this is very fair for the company. So if you're getting a 7% free cash flow yield, 7% revenue growth, this is like a 14% annual return on PayPal for a company that's growing very well and is trading at 14 times earnings. And this is with the adjustments of stock-based compensation. So 14 times earnings, 7% free cash flow yield for 7 to 8% revenue growth and decent margins. In my opinion, this is not expensive at all for PayPal. And I would see 14 to 15% a year, which is around a double every 5 years for the company. And I really like PayPal over here. And even though PayPal doesn't have a moat and all these things, at 14 times earnings, it's priced like it's never going to grow again with a decent balance sheet. So I like PayPal. I think PayPal is presenting good buying opportunity. If it wasn't for Friday, I think, things would have gotten much worse and much better, and PayPal would have been going up. But every stock went down on Friday, and maybe this is presenting a great buying opportunity, unless we have a market crash and recession, everything goes down. But no one really can predict those things. And based on the fundamentals that I'm seeing and everything else, I like Amazon, I like PayPal. I think both of them are presenting a decent buying opportunity at this price. And this is all I have to say. It's not financial advice, just my opinion. So thank you very much for watching. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.